Yeah, but you can't really have it both ways.
Well, I'm just.
You were talking a minute ago about people not earning any interest from their pensions and investments, etc., etc., and that's to some extent because interest rates are currently very low because they're trying to stimulate the economy. So they will be better off when interest rates increase.
Well, there's another way of looking at this. Rather than relying upon the banks to look after the pensioners, the elderly and everything, and government to look after them, because even on that front it doesn't look very pretty, what I'm seeing and hearing is occurring, that we actually, amongst our communities, go back, as we used to looking after them in our extended families. Mm-hmm. Because every time we seem to relegate responsibility over to corporations, for-profit corporations at that, people seem to get hurt. And they get less, well, and that's exactly
stopping you doing that, of course.
And that's exactly what we do within our family. But the vast majority of people don't know this. And what we see happening now, as in Greece, is the International Monetary Fund is suggesting that what needs to happen is those countries have got to hand over the actual resources of the country in order to deal with the deficit. So that's the people's resources, the natural land, going into the hands of corporations, and that's what we've seen happen in the two-thirds world. There was a very good presentation given by a guy called the Confessions of an Economic Hitman. You know, unless there is a solution presented, and it needs presenting very urgently, because this has happened before. Everything that we see now is symptomatic of the same things that happened during the approach to the Great Depression, when millions of people starved in a world of plenty because they'd been removed off their land because they couldn't pay their mortgages. And the same thing's happening now. Now, you're talking about a society sustaining itself. If even a tiny proportion of the monies are not created into existence, it follows that the amount of indebtedness is going to go up. That is borne out by what we see, is it not?
Yeah, but I'm not quite sure why you're talking to a central bank about that, because we don't actually obviously regulate the banks at the moment, and the whole banking system, if you want that changed, that will be a matter for legislation, not something we would have the power to do.
Right, well, can you acknowledge that at least that we seem to have a situation where there's a terminal problem for ordinary people, where...
Well, no, I wouldn't acknowledge that.
Okay.
It may be for specific individuals, certainly, but not for everybody.
Well, we have now 1.5 million families in this country that are homeless. We have a vast swathe of transgressions against people through the austerity measures, where in the big society meetings, councils have said they're going to increase rentals, increase fees, fines, levies, duties, whatever they can get. And government appears to be doing the same thing. So we have a system where people are being processed as summary judgments through courts. People are being expected to pay for things when they haven't got the money to do it. And the reason they haven't got the money to do it is because the money's been sucked out of the economy to pay the interest on the national debt. And when I look at what the national debt comprises of, you know, the question that's been asked on whatdotheyknow.com is, what was it of real tangible value that was surrendered by the bank as it created that money as debt? That was the first question.
Sorry, who created it as debt? Not the Bank of England.
Well, when you issue currency against government bonds, yeah, which is what you do, I understand.
No,
okay,
we don't. The government, the national debt mostly consists of British government stocks or treasury bills, which are, in a way, not quite shares in the government, but the government say, you give us your £100, we will pay you X amount of interest for X amount of years, and after those term is expired, you get your principal back. You are basically lending money to the government. And that's issued by the Debt Management Office, not the Bank of England.
So the government
borrows from you, me, anybody, pension funds, anybody who wants to buy British government stock.
And then it brings those bonds to the Bank of England, who issues the money into existence?
No, nothing to do with us.
Nothing to do with you at all?
No.
Okay. I'm kind of curious now.
I mean, the government effectively borrowing money from whoever wishes to invest in the government. So it can be companies, individuals, pension funds do a lot because obviously government bonds or government stock give a good stream of income, so it's ideal for pension investment.
So what's the role of the Bank of England?
We provide liquidity and a settlement system for the banks operating in the UK. So
can you explain liquidity?
Well, if Barclays owe NatWest some money, they can borrow, and they don't happen to have it to hand, as it were. They can borrow it from us against collateral, and this obviously it's fairly simple. For a short term, just to settle overnight or whatever it may be.
So what's the level of liquidity, or what's the level that those institutions owe you at the moment?
I couldn't tell you offhand.
No, but I mean, is it a large amount of money?
Well, these are short-term things. You know, it'll be, most of them are, settled overnight or the next day, that sort of thing.
So when I hear, I mean, because you're connected, I understand, with the Federal Reserve in the United States, it's part of the same overall.
Well, it's a fellow central bank, certainly.
Right. Okay. So to whom is all this money owed? The global debts.
Well, again, to whomever has invested in it. So it can be individuals, it could be, I don't know, for instance, you have a pension fund, but maybe if you do, your pension provider has bought British government stock or whatever. Governments own their own, sometimes each other's stock because they're seen as a safe investment.
So they're all swapping bits of paper, and from the swapping of those bits of paper, we have. I mean,
that's a small amount of,
Well, yeah, but how much is the UK national debt at the moment? I think some estimate somewhere in the order of, I'm hearing all sorts of figures, 18 trillion.
I don't know what it is at the moment. I'd have to look at the Treasury.
Who's that owed to?
Well, whoever is on the stock register is only British government stock, and that could be anybody.
So this is fascinating. So the national deficit is owed to people who own bits of paper where they've invested for a return on their investment.
Exactly. That's how it's always been.
Okay. And the role of the Bank of England is purely to maintain the liquidity of the banking system or financial institutions where they will provide short-term lending.
Well, yeah, we also have longer-term market operations, and obviously we.
So you don't actually create money.
They have done for this quantitative easing, it's called the asset purchase facility.
And is that interest-bearing?
Right. This is what we've done, or actually a vehicle off the side of the Bank of England has done. It's created. No, so let's go back to the Bank of England has electronically created approximately £200 billion, which they've lent to the Bank of England Asset Purchase Facility Fund at a rate of interest.
Right.
They have bought.
Well, sorry, can I just ask a question relating to that? When you say they have issued that money, is it issued?
No, well, whatever. It's just been created electronically. It's not.
So created from what?
From a fresh air, which is what.
From thin air.
Is about.
Okay,
yeah.
So if that has been created out of fresh air, right? In other words, if I had license to do it, I could run a printing press.
But it's not physical money. It's not.
No, it's not physical. No, but it will have a physical impact, right? Won't it?
Yeah. Well, if I can actually go through the whole story, it might make more sense. The Asset Purchase Facility Fund has bought principally British government stocks from the secondary market, not from the government. So pension funds, whoever who wants to sell them. The BAPF hold those stocks. They get the dividends that the government would pay to the stock owner. Stockholder rather, and the pension fund, whoever has got cash from selling their stock to the BAPF, can then invest it in other things, obviously. So it's almost like sort of cashing in your life insurance, something or an endowment. You get the money rather than the piece of paper that say you're going to get the money in a few years' time. Now, central banks are not allowed to finance government deficits, so all these stocks will be sold back to the market sometime in the future. The loan will be repaid to the Bank of England. That will be the end of it.
There's my problem, because what I can see for the last 50 years is the level of indebtedness just multiplying up. And one of the most interesting things you said there, that money that you're issuing under this, what did you call it, quantitative easing?
Yeah, it's actually called the asset purchase fund.
Right, so that money that you're creating is going to carry interest, and it's a large amount of money. But again, the interest comes from where?
The interest comes via the Asset Purchase Facility Fund from the dividends paid on the British government stock.
So ultimately what this means is, and you see, I had a conversation a few years ago, and I really appreciate this conversation, by the way. I had a conversation with somebody who worked in the city, one of the traders, and he was very full of himself. He got paid a very large amount of money, driving around in a Porsche and a very nice house in I think they call it Clam now, not Clapham. Over £1 million worth of house. And he said, we actually create money. We actually create wealth, he said. And I said, that's interesting. I said, because I've run my own little business, and if I've got investors, the only reason I need investors is because it's the only way of getting large things done. And that those investors, if they're not actually actively involved in running the operation, will sit there and earn the sweat equity from people without actually doing anything, just because they happen to find themselves with that capacity to do that.
But hasn't that always been the case? That money can lend it out to other people,
well,
whether it's through financial intermediaries or not?
Well, I think for a very long time that's been the case. But I know that before the time of Oliver Cromwell, usury was outlawed in this country, throughout Christendom.
It was, okay. It still went on, didn't it?
It went on to an extent, but then there were very much more overt slavery occurring. And in fact, if I look back through ancient history, I find that this system seems to have come in with the Roman. It's ecclesiastical law, right?
Yeah, if you don't have lending, you very much limit the growth of an economy.
Well, I don't know, because this is again everything's measured with this thing about economy, rather than measuring it in terms of the quality of people's lives. And
I understand what you said, but this would require a fundamental change in how particularly Western economies are run.
Well, I think that's what's needed. I personally
but that isn't with respect to something we could do anything about.
No, but you see, what I see at the moment happening is that through the control that is implicitly there between those who have money and those who don't, over those who don't, what I can see is many things being done that are against the fundamental and sovereign law that people don't want. I mean, 1 million people marching in 2003 against Iraq, and yet still the government went along and did it, along with their friends overseas. And now they've gone into Libya, where they're effectively spending the money of the people's money. Now, yeah, you're right. It's a substantial shift in consciousness that's going to be required to solve this problem. But if the problem has been created by the banking system, and it appears the banking and the city, the market,
But it's only been created, you say it's created by the banking system, but only within the rules, apart from also when they...
Yeah, but who wrote those rules?
The government.
Yeah, exactly, and who are they? Who are they working for?
You and me, and that's who's elected them.
Well, unfortunately, that's not what I find. In fact, when I looked, I found recently one of the sharp end bankers. There's a credit card company called the Granite Credit Card that writes to anybody or contacts them through the internet if they've got poor credit rating. They charge 39.4% interest, APR. Massive, right? Unsustainable, right? Who's behind that? Well, then I find it's the Vanquis Bank, John Van Cafella, who was also chairman, or was chairman, of the Hevo Group, which is now the Dodds Group, dodds.co.uk. And that's just one organisation, I'm sure. But they're actually responsible for the training, recruitment of the political class and civil servant, and the communications, and the media. That's very scary, because that tells me there are intrinsic links between those within the banking system and the system of government. And when it comes to elections and people's capacity to choose, well, that then comes down to the information that they're told. And it stands to reason that if you have a system, as we seem to, where you have a status difference, a massive difference, and those that will want to maintain their status won't necessarily be completely honest about what they're doing and how they're operating things. And then if I start looking at the think tanks that are involved in this, and I was talking to one of the ladies at the Chatham House yesterday, because throughout